That's closing bell on Wall Street. And now it's market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. Yahoo Finance's Jared Blickery joining us here to break down the moves today. Jared.
Yes, we got a record high in the Nasdaq Composite, but we're looking at the Dow right now. That's up 114 points or 0.25%. Let's flip on over to the Nasdaq Composite, and we also hit an intraday record high right on the open. So all in all, pretty bullish day for tech, and it was led by software. We'll take a look at software in a second. S&P 500 up about 0.2%. Gave back about half of the gains we saw from the highs earlier in the day, but I think investors will take that. And the S&P 600 small cap index ended the day down, but pretty close to the highs of the day, although negative by about 18 basis points, as you can see there. Let's skip on over to our heat map where we see sector action. Tech, that was number one today. XLK up 0.75%, followed by consumer discretionary and industrials. Those three were the only outperformers. But then in fourth place, you got communication services. That hit a record high. That is the home of Meta and Alphabet and Verizon and Netflix, all kind of a strange basket there. If you look at the Nasdaq 100, mixed board with respect to the mega caps, some winners, some losers. Broadcom here up 3.21%. That hit a record high on the close, and that has just been on an incredible tear this year, up 50% just about. And then taking a look at some of the losers in terms of the big ones, Tesla down about 1.25% there. Not seeing too many outsized losses, but PepsiCo down 3%. That's kind of notable. And Keurig Dr. Pepper down more than 2%. So the staple's not doing as well today as some of the tech trades. And here's the Dow. We see Walmart up 1.83%. IBM a standout, up 3%. And here's the year-to-date on Big Blue, up 16.5%. I believe these are record highs just a couple months ago, but not today. And if we take a look inside the tech trade, let's take a look at software. That was really a standout. Hasn't been doing so well recently, but did today. There is IBM at the bottom. You can see right there again. Take-Two up almost 4%. Nutanix up 7%. HubSpot up 2%. So broad strength we're seeing there. And then semiconductors, we're also seeing a lot of green here. We already touched Broadcom, but also looking at gains of 4% for Marvell, and Lam Research, a gain of about 2%. Josh?
Thank you, Jared. Well, gold's latest rally may be flashed a good sign for Bitcoin, with investors eyeing the seasonal shift ahead. Joining us now is senior markets reporter Inez Ferre. Inez.
Yeah, Josh, and we have seen gold rallying over the last several weeks, gold at record highs. And this tends to be positive for Bitcoin because you have Fundstrat's Sean Farrell talking about gold tends to front run Bitcoin, and it has tended to do this since 2023. So this resurgence that we've seen in gold is positive when you're talking about cryptocurrencies like Bitcoin. In September, you tend to see weakness for crypto, especially for Bitcoin. You see the altcoins that are doing better than Bitcoin. October, you tend to see a sort of divergence with equities and with Bitcoin as well, because equities tend to be a little bit more volatile. But in October, you tend to see Bitcoin have stronger historical returns. So the fact that you are seeing gold at record highs and that gold has been rallying so much over the last couple of weeks or so, this bodes well for Bitcoin.
So Inez, September often we know brings weakness for stocks and crypto, but history shows, as you're knowing that October tends to be one of the more bullish months for digital assets. So is there foreshadowing there with gold and Bitcoin?
There certainly is some foreshadowing. I mean, if you look at sort of historical patterns, and if you look at also, Wall Street calls this liquidity, and this being that when you see liquidity at highs, elevated levels, then you tend to see gold and Bitcoin as sort of the liquidity valve. So you tend to see investors sort of migrating towards those assets. Those assets tend to inflate, but it tends to be first gold that does that, and then Bitcoin that follows. So while we do see sort of a consolidation, some choppy consolidation, I should say, when it comes to Bitcoin in September, you should see Bitcoin going higher in October with some seasonal tailwinds for the cryptocurrency.
All right, Inez, thank you.
Thank you.
Well, all eyes are on the inflation prints coming this week, but economists are also going to get an update on the health of the labor market. On Tuesday morning, the Bureau of Labor Statistics is set to release revisions to job growth in the first quarter of this year. Washington correspondent Ben Werschel has a look at what to expect. Ben.
Yeah, Josh. So as you mentioned, this new data will only go through March of this year. But even though it's backwards looking, I think there's a lot of expectation both on Wall Street and here in Washington about sort of what this shows. And we're going to see ripples from it for a long time, partly because last year's revision here was that the U.S. labor market had 818,000 less jobs than previously thought. That was a major event last year. It happened right in the middle of a presidential election. And the consensus estimates this year are a little lower, but they're still high. The consensus estimate is about 700,000. What we could see, that we could learn that the labor market is 700,000 less than we previously thought. But there's some estimates could go even higher as $900,000. And then there's additional data under the hood here, month by month numbers, all of which is sort of, I think, will point economists towards the question of when did this labor market slowdown we've been seeing this summer began? Essentially, how early was the downshift? Was it as early as this spring? Was it even earlier than that into last year when we saw a lot of this labor market softening that we've seen real and evidence this summer? How early did it begin? And that'll create a lot of discussion both in Wall Street but also here in Washington at the White House.
How do we think, Ben, the president might respond and react to the data?
Yeah, this is a real interesting aspect of this. Why I'm here in Washington interested in this is because I think it can go a couple different directions. As I mentioned, the revisions piece has become a key point of criticism from Trump and his team. Basically, any revision in job data is a sign that something's wrong, something is amiss. And it's true that revisions have become bigger in recent years, especially after the COVID pandemic. So there is going to be the sort of headline number of this big revision, and that could fuel the ongoing politicization of government data. There was, of course, Trump fired the BLS commissioner. That's where this data is going to be coming from, and his successor is in the wings. But I think there's also this could kind of go a different direction in the sense that 10 months of this data is Joe Biden's last 10 months in office. So if there's a significant softening there, the argument you could hear from the White House is that, hey, this slowdown began earlier. The weakness we inherited, we're just trying to dig ourselves out of it. So you could argue that those are kind of two opposite takes to have, to say that the survey's fake, but that it shows this is Biden's fault. I wouldn't put it past Trump to do kind of a version of both of those. So I think that'll be a real interesting thread to watch tomorrow once we kind of are digging through these numbers.
How do you think, Ben, just finally, how does this all sort of play into the broader, Ben, political questions, sort of just circulating the jobs data we've been seeing and getting?
Yeah. It's pretty rare that we have a kind of a big political forum for jobs data, but we're going to have that in the coming weeks. Trump's pick to lead the Bureau of Labor Statistics, E.J. Antoni of the Heritage Foundation, is set for a Senate confirmation hearing. We don't have timing of that, but it's expected in the coming weeks or months. A lot of times this job doesn't even have a kind of the full pomp and circumstances of a hearing. So we're going to have a real kind of conversation about this, and I expect that this number is going to be central to it. Antoni is a pretty polarizing figure. There's going to be a lot of pushback for his pick, but also kind of Trump's overall point here, which is that he doesn't believe the economic data, and that we shouldn't too, and whether people are going to believe it. So it's both kind of coming at a key moment, but also ahead of a moment that I think a lot of us are going to be watching about what the legacy of Trump's move to fire the BLS commissioner is, and sort of the belief in government data going forward.
Ben, great to see you as always. Thank you, sir.
Thanks.
Coming up, we're at Goldman Sachs' signature tech event, and we're looking at the best plays in software for your portfolio. Don't go anywhere. More market domination overtime coming right up. The Goldman Sachs Communacopia and Technology Conference kicking off today in San Francisco. Let's send it over now to Executive Editor Brian Sosny, live at the conference with more on the latest in the tech arena.
Josh, good to see you. Just finished my lunch, but I'm looking forward to talking about some AI and all things tech with Kash Rangan, Goldman Sachs co-head of TMT and managing director. Kash, good to see you. Feels like I just saw you here last year. Now we're here again.
Good to see you, Brian. Thanks for having me.
You cover a lot of the stocks that I really enjoy talking about. Figma, Snowflake, Microsoft, CoreWeave, Oracle. One narrative that I've heard so far at the conference, a real concern that AI is going to just eviscerate software companies.
Yeah.
What say you?
Yeah. I don't think it will. And I'll tell you why. Because AI is going to work with software, and it's going to be a force multiplier for software. It's easy to imagine a future where we don't know exactly how this technology is going to play out. So the temptation is AI is going to do this, AI is going to do that, whatnot. We tend to overestimate what it can do and underestimate the power of legacy. So I liken it to the birth of web browser, Netscape, 95, 99 timeframe. Everybody thought the web browser was going to change enterprise software. It just ended up being a front end, and it caused a redesign, re-architecture, a transformation of the software industry. So today, everything runs on a web browser. I look at AI the same way. Back then, people said that web browser is going to mean that companies like Netscape, Yahoo, et cetera, are going to become the new disruptors in software. But the reason why software will be a good asset class, the business of doing business and the logic behind doing business, it does not change. And all that is exemplified in the back end. The front end might change. We're going to have a new LLM interface, and how you interact with the software is going to become even more streamlined, natural language, etc. But I think it's the rebirth of software.
What does Mark Benioff at Salesforce need to do to remove the overhang on his stock's valuation, given this narrative on AI?
A lot of things. You are going to be interviewing him, and I'm
looking forward
going to be
to talking
interviewing
about
him
it. I'm psyched to
tomorrow
talk
as
to Mark.
well.
Yeah, no,
So
it's always a
hopefully
treat.
we'll be in a better position. But look, I think if you look at stocks that have worked in software, you're going to be interviewing Sridhar from Snowflake. Reacceleration. So there can be a narrative, and there is the numbers. The numbers continue one thing, but the narrative is not accommodative. It's not going to help. But in their case, the business reaccelerated. In the case of Salesforce, if they're able to make a case why we're at the bottom of this growth rate at 9-10%-ish, and there's certain things about their data cloud and Agentforce, the book of business, which stands at about 1.2 billion, when that starts to, the growth that it throws off, when it overcomes the depression in the installed base from a renewal standpoint, when the net result is positive, and the growth should start to inflect. When that growth starts to inflect, and they go from, let's say, 8,000 Agentforce customers to 12,000, 14,000, and becomes a material driver of revenue, that is when the valuation starts to make.
So do you buy a name like Salesforce?
I do. I'm a big believer. I mean, I'm not allowed to buy stocks in my coverage, but I'm a big believer in companies that are run by CEOs that have a sense of urgency. So what I like about Mark is that he wakes up every day and he's thinking about AI all the time. He wants the company to succeed. He's working super, super hard. We want to see that founder CEO involvement and a sense of passion and digging in and making the right bets and taking complete ownership and working super hard.
Where do you fall in the debate? And really, it was Sam Altman over at OpenAI that got this narrative going. AI bubble, does one exist?
Yeah. Well, fortunately, my stocks are not in a bubble, right? So they are in a depression. Many of them are. If you are in application software, you're going through a bit of a depression, right? If you're in platform software, it's just one level below, like a Snowflake, MongoDB. They feel like they're in an okay position, right? When you look at infrastructure, again, these stocks in the public market, they're not bubbly in terms of valuation. Where the bubble is present is, and we have a venture capital panel today at 4:25. And that's the question I'm going to be asking the VCs. Are you in a bubble? Because the bubble, you can make a case, is more absolutely pertinent to the private markets, VC funding, the valuations of private companies.
So is OpenAI worth hundreds of billions of dollars?
Who knows? I mean, history will determine what the true value of these companies, because ultimately, a SaaS business is a great way to think about what a company's value should be. Recurring revenues at high profit margins can be levered enormously to produce meaningful cash flows that do not require a lot of reinvestment. When you reach that point, and these model companies, whether it's OpenAI, Anthropic, they're still in the massive investment phase, right? And so the economic model at an end user level, we just don't know.
One of the other names that I follow closely, and I know you follow, is CoreWeave.
Yeah.
How concerned are you about the debt levels on this company's balance sheet? And then what happens to CoreWeave's financials when the Fed starts to cut rates?
Yeah. First of all, you're going to be interviewing
yeah, I'm excited
Mike,
to talk to Michael.
I think, yeah, and I'm going to be interviewing on stage as well, I think tomorrow or day after. It is a high leveraged bet on the AI infrastructure theme. They are the only pure AI-only hyperscaler in the public markets. And if the cost of funding were to go down, I think it would be a positive for the company. So they'd be able to line up debt financing at a lower and lower rate. One thing about what these guys do is they are the absolute specialists in putting up a GPU cluster and helping that enterprise go to market very, very quickly. If they can continue to keep the time to market advantage, and hey, we're the experts, we can roll out this data center very, very quickly, and the cost of financing is going to come down over a period of time, then I think it can be a model that can be, you look at AWS, nobody expected AWS 15, 20 years ago. It started with storage and compute, commodity, absolute commodity, right? And how did that become a behemoth of a business? Differentiate, add value. I think there is great hope that CoreWeave can do something like that. But, execution, hiring innovative product people, developing an enterprise go-to-market, all these things they need to do in order to realize the potential of
Real quick before I let you go, Cash, you mentioned some of the stocks in your coverage are, valuation depressed. Is there any name you think that will climb out of that depression into year-end?
I am betting on the application software layer. So there are companies like Intuit, Salesforce, Adobe. They don't have perfect narratives, but they have good enough narratives. And the other company that's also in that bucket is ServiceNow. ServiceNow can straddle. You could call them an application software company or a platform company. I love that business. Bill McDermott, also another CEO.
High energy dude. You got to follow him on Instagram.
Yeah, he's great. He's going to be presenting, I think, on Wednesday. Stocks like that, that have the growth, the long-term durability of the business model, and the profitability, and AI on top. I mean, I love such companies. Yeah.
Always great to get some time with you.
Good to see you as
Cash
well.
Rangan, co-head of TMT at Goldman Sachs and managing director. Good to see you. Get some rest. You got a busy day coming up tomorrow. Appreciate it. All right, much more ahead. Josh, we'll see you later.
Time now for to watch Tuesday, September 9th. We're going to start off with Apple. Apple's biggest product launch event of the year is taking place on Tuesday in California. The company is introducing its next generation iPhone lineup, new smartwatches, and other products. Yahoo Finance will have coverage from the event on the ground in Cupertino. Taking a look at labor, the Bureau of Labor Statistics preliminary benchmark revision coming out on Tuesday. Economists estimating the revision to amount to 700,000 less payrolls for the year. And taking a look at earnings as well, we're going to be getting another batch of reports on Tuesday, including Oracle, Synopsys, and GameStop. Oracle announced the results for the first quarter after the markets close. Analysts expecting strong AI demand to propel Oracle in Q1, with Microsoft and CoreWeave showing big gains in cloud services tied to AI that should also benefit Oracle. Investors will be keeping a close eye on spending too, with Oracle shelling out more on data centers and infrastructure. That's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of the break, it's Asking for a Trend. We've got the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned.